want to bring in Luke Lloyd and Ken Mahoney into the conversation. Ken, maybe retail is the new smart money. It seems like they kind of sniffed out today's session better than Wall Street. We saw volumes go down a lot. We saw the bullishness go down a lot. What are your thoughts in general for just whether we can keep this individual investor revolution going?
I think so. I mean, look, they understand now, Charles, the old adage, okay, markets go up by way of escalator, and when they come down, the elevator. Here's the elevator. 7 months of riding the escalator. They know that. They get it, and they prepare themselves for it. At the end of the day, I think they know they're nimble. Again, someone like Cathie Wood, she needs to move money around. It's $10 million, hundreds of millions of dollars to move money around in a position, out of position. The individual investor could get in, get out, and these volatile markets, actually, this works well for them, Charles.
Luke, one of the issues has been a lot of investors reach out to me and tell me they're upset by a lack of action from the SEC. Some are wondering if the recent Federal Reserve divestment announcement was maybe a ploy all along to get out before a big fall. So there's some conspiracy out there. How important, though, is it for investors to believe that the playing field is level?
Yeah, so Charles, it's not just important for investors to believe the playing field is level. It's more important for the playing field to actually be level, right? So this is the most level the playing field has ever been, in my opinion. The retail investors, they have more access than ever to the markets. They have more power than ever. They're actually moving so many individual stocks. They're moving the entire markets. But Charles, even with the playing field being more level, there's no substitute for due diligence in the time it takes to actively manage a portfolio, right? So the past year and a half, we've only seen the markets go up, right? So when today, things like today happens and the market drops, 3%, people start to freak out and play with emotions, right? So here's a quick tip in my opinion. If you don't have the time or interest, to actively manage a portfolio, then you got to find somebody like me, Ken, or you, Charles, to take care of that, right? Since this is all we do, we eat, sleep, and breathe the markets.
Yeah, no, there's no doubt about that. But I think this new class, they're committed to it. I've seen their due diligence, and I think they are doing that.
Absolutely.
Let's talk about the main strategy that's worked, though. Buy the dip, obviously amazingly successful. I don't think the average person watching the show can buy every dip, right? Sometimes they come on, but when do you want to buy this particular dip? Because I'm already salivating, Ken.
And you should, because the volatility index nearing 30 is a good sign. Look, we hovered around 16 most of the summer, low volatility, risk on, right? Risk on. Look, last time we hit 30 was back in January of this year, February of this year, and May of this year. Look at the chart. We hit 30, and the next thing we started coming back in on the volatility index and risk on back again. So we're getting closer. So what, the VIX up 30% today. We did all one full swoop, hitting around 28.
Right.
Right here, you're right. This offers a really good risk-reward dynamic with the VIX approaching 30. Look what happened this year already.
So, Luke, we closed under the 50-day on Friday. We're approaching the 100-day on the S&P. When do we buy this dip, and what looks attractive to you right now?
Yeah, so I mean, that's always the million-dollar question, right, Charles? The thing is, every investor has a certain amount of capital that they can allocate to the stock market. The stock market presents opportunities every single day. So it's not a question of necessarily when to put your money to work. It's a question of how to put your money to work and make your money work for you. So it's all about opportunity cost. When you own one stock, you're giving up the opportunity to have that money somewhere else. So you constantly need to be upgrading your portfolio, and that's why active management is more important than ever. But to answer your question, Charles, it's never the wrong time to buy the dip. I think it's always the right time to buy the dip.
I love that, man. I might steal that hashtag, never the wrong time to buy the dip. Hey,
I bet you on Twitter later. I bet you on Twitter later.
Yeah.
We're going to check in a minute. I got 20 seconds, Ken. Anything rising to the top of your would-be buy list?
Oh, yeah. These stocks, companies that beat the last quarter and raised guidance, think about NVIDIA. I mean, NVIDIA right here, they're on a sweet spot, right? They're doing everything about autonomous cars.
Yeah.
They're involved in all the right areas. NVIDIA, they beat, they raised guidance, and they'll probably do it again, Charles.
You know what? I've had at least 5 people ask me, should they be buying NVIDIA right now? And all of them said, I don't care if you say yes or no, I'm buying it anyway. Luke, Ken, thank you both very much. All right, it's a